Not only did I have the worst day ever in the markets, but I also forgot to turn on the audio for the previous video. And so now I have to record it again. So anyways, it is June 16th, and this is the ever increasingly more difficult video log. It takes 30,000 to a million. It's not happening right now. Fully levered because of some of the actions that happened during the week. Markets dropped like 10% or something over the week, including the gap down on Monday. And it's just been absolutely brutal. There's tons of portfolio destruction here in the account that you're going to see in a second. I'm down like more than twice the market. Huge losses in the account. So I want to show you that. And then give you some of the thoughts I have for the upcoming markets. Also, thoughts on EBIX. So you got to hear this on EBIX. There is a new bear report that came out, and I'll talk about it in a sec. Here's the account. I'm sitting at 155,000. I was actually in 154s before the after hours action. So more than a $14,000 loss, 8.5% in the account. It's huge loss. But such is life. I thought that given the market crash on Monday and the reaction yesterday, there wasn't going to be that big of a sell-off on Friday, but apparently I'm wrong. So gonna have to suffer the consequences. Still not in emergency mode yet, but I will be pretty soon. I think this mic is a little hot, huh? I'll put a little away from my face. Anyway, options positions here. I'm gonna scroll through it real quick. You can figure out the exact positions by reading everything into the little box right here. Feel free to pause all your video player at any moment to try to figure it out. The ADRs dropped to like 10, 15, 20, 30%. The Chinese ADRs. PayPal Leap options down 9%. Apple down 3.5%. Actually, it was about 4% on the day. 3.97% on the day. Real bad. Apple real bad. But I think Apple still has some room to go, but I will be very concentrated into Apple if it drops further. I might sell off other core positions in order to gang up on that stock. Anyway, moving on here, Main Street Capital over 3% down. I'm really having Main Street Capital right now. 945 shares and another 300 to go. So if I buy those, I'll have like almost a $300 dividend coming in every month. If the dividend stays. Apparently, the market is factoring in an economic decline of epic proportions. It's unreal. I mean, Smith & Wesson, some of these valuations are absolutely crazy. Smith & Wesson is down 7%. The PE of Smith & Wesson is 2.93, and that hasn't even updated. I don't think Robinhood updated after today's crash. So absolutely insane. Goldman Sachs is like 5 point something. Let me see. Goldman Sachs 5.63. I mean, it's crazy. And that assumes that the earnings, obviously I know how this works, so the earnings will fall and therefore the PE will be higher, especially if they sell shares in order to stay afloat for whatever operations need they might have. But I mean, this is expecting, like, to me, a recession that's very deep, like 2008 deep. I don't know if it's going to be that deep, but that's what the market thinks based on these valuations. I mean, these are bigger and stronger companies than they were 10 years ago. It's not the same. Paramount, crazy stuff going on here. So Paramount, I have like 30K in it right now. I got 1,200 shares or something crazy, and then another 200 set to be bought at $25 by the end of the week. So absolutely nuts. This is just a pet call buy just for kicks, just to waste some of the cash. I'm fully levered, by the way. I mean, it's just incredible. Here's the account investing tab. You'll see that I am 44% in, 50% is fully levered. That means that I borrow just as much money as I have. That's 100% leverage. Apple positions now over, it's like 109,000. It's 835 shares of Apple. I mean, I'm super concentrated. Apple could drop further, like I said. Its P is 22, and its earnings could take a hit, and then I can see it perhaps falling down. But it's such a strong company that I'm just gonna go like almost all in on Apple. What else is there? I mean, some of these banking stocks are just incredibly cheap. Like, take a look at Citibank. Citigroup here for a moment. I was even more enthusiastic, by the way. I'm usually not that enthusiastic, but I was even more enthusiastic when I was filming the video the first time around because I just couldn't believe some of these numbers and some of the drops that are happening. I know that the market overdoes itself sometimes and the correction could be deeper. The bear market could go deeper, but it's incredible. 5.6 price to earnings on Citi. And let me show you this, right? Do you see this dividend here? 4.29%. Well, check this out, right? We're going to go to stockanalysis.com and find Citigroup by typing this letter C. And look at this, man. Yeah, they have a lot of debt, but the banks know how to use that debt, right? They take that to lend it out, and then they collect difference. So they do have $216 billion in debt. However, look at his financials. Revenue, super steady. Quarterly revenue, super steady revenue, right? For the last since 2012. Then we have operating income, super steady. Took a little hit obviously in 2020. Super steady. We got shares outstanding. Look at this. They've halved their share count in the last 5 years, 7 years. They've halved it almost, or 1/3. So they're returning value to shareholders like crazy. If they kept that, they'd be a much bigger company, but it's hard to grow at Citigroup. Look at his dividend, man. 23.8% payout ratio. It's nothing. It's 4.35%. And the payout ratio is 23.8. It's so easy for them to pay that dividend. And you can see that they've been increasing it like crazy. So this is like the dividend stock of dividend stocks. Reminds me of like a Canadian bank or something. So it's absolutely nuts what's going on. Like Citigroup, I saw some puts on Citigroup. I want to get in there. Let me see if it shows my positions right there. So I was trying to get in at 44. It hasn't dropped that low. I don't know if the market will be silly enough to drop it that low by tomorrow, but at least I have that $8 that I'm going to get if it doesn't drop. So a huge saving on the account. I mean, it's crazy. I just took such a big beating. It's so unexpected. But it's okay though. Nothing changes. If I do get really deep into the margin territory by, tomorrow, I'm going to have to go to emergency measures on Monday. So hopefully that doesn't happen. If you've been watching this channel for a while, following with me on this journey for a while, then you know what emergency measures are. I'm not going to explain them here. But I might have to go to emergency measures like in 2020. So we'll see how that goes. It's going to be rough. Speaking of the market, I think tomorrow is going to be a rebound day. The main reason why is because I think that, first of all, the market makers are not going to let it drop that low. And the reason I say this because it's 10% drop and no one's buying calls right now, right? No one's going long. It's such a bearish environment. And who's on the other side of that trade? The market makers. And so they have to bring these prices up to par a little bit in order to kill all these put buyers, right? And they need to collect that premium. So I think there's going to be some market lift. I think that's going to trigger short covering by people who took out short positions, and I think that's going to bring the market up to a level. Now it's going to be really indicative how it ends up later on Friday afternoon, right? Friday towards close, if it's going to be a down direction or up direction, it's going to kind of position. It's going to tell how people are positioning for next week. But I have a hard time believing that tomorrow is going to be a red day. I have a strong conviction it's going to be green, which is going to allow me to reduce some of that leverage that I have, and then hopefully lever back up next week. I don't know if it keeps dropping, but so far I've timed the previous uptick, but it was so weak that only deleveraged down to 16.4%, and now I'm back up to like 44, which means 30 to 88 or something like that. So I'm fully levered basically right now, and I can't take too much beating before I have to start going emergency. I didn't think that this bear market will accelerate to this level. I mean, there's not even like, I understand the dynamics, right? I understand like, yeah, rates are going up, mortgage rates are going up, and people are gonna be not buying houses. That means Home Depot is gonna take a hit, etc. Gases are up, so yeah, there's a squeeze in the consumer, but like, I don't think that people are that much in trouble to where they have to start selling their houses. They're gonna do everything they can and to preserve their situation. They know tough times are ahead. They've been through it in 2008, so they know not to like take too much risk. I think on average, obviously, I'm taking a lot of risk, but with discount. But on average, I know that people are more aware nowadays of financial potential problems than before, and I think that I don't know. I can't see this being that. I mean, the money's already been printed on this thing. It's like, I think having a deflationary crash is going to be really tough at this point. But look, I might eat my words and I could be in big trouble, but and if I am, that's fine. I think there's going to be bounces up along the way, which I can deleverage. But I mean, some of these valuations, I think this market is pricing in halving of the U.S. economy, or even global economy, like halving of commercial activity. I mean, that's very extreme. That's like, that's 2008 status. So I don't know if that's gonna happen. But you let me know what you think, and also how you fared today. I know you did better than I did. I just know it. Okay, no one's done worse than I did today. All right, let me know how you did. Hopefully tomorrow is green, and I'll make another video. Sorry, the previous video was a little bit longer, but I'm gonna cut it right here because I've been talking for a while. So see you tomorrow. Hopefully green day. Peace.